This is exactly what I'm looking for when I'm selling options to collect the maximum amount of premium. Let's go. Yo, what is going on, Premium Chasers? I hope you are having a God-blessed day. Today, every single person is going to get my rolling ebook, right? This is going to show you exactly when to roll, when not to roll, to make the best decision for yourself to collect the maximum premium. So if you want that rolling ebook, make sure you drop a comment down below in today's video. But guys, today, popular requested video, Pete, how do we find the ideal setups for trading and selling options, right? What should we be looking at every single morning when we want to collect the most juice from those people that write our paychecks, the options buyers? And that is what today's video is all about. I'm going to show you guys kind of A to Z how I look at things when I'm about to open up a position, or just when I'm looking at my watch list and seeing what options I want to talk about. So let's go over the shoulder. All right, you already know SoFi is just absolutely on fire today, okay? So let's talk about it, all right? SoFi obviously is up 9% today. So what do I do with that information? Well, I'm like, okay, do I have 100 shares? Okay. Do I want to sell my shares? Yes, right? If you say no to that, you probably don't want to sell options. But for me personally, option selling is the whole purpose of option selling is to make money and get in and out of stocks and collect real tangible income, not paper gains, right? Some of you, right, and this is the first thing that you have to understand before we jump into things, right? You're all buying SoFi right now. You're crazy, because look at where you could have been buying it literally like 2 weeks ago when it was down 950, right? So quick little thing there. So first thing I like to do is I go over to the chart, and I got my indicators on here, right? I got my Bollinger Band with the details set to 30. That means the middle band will be my 30-day moving average, right? Then I also have my 200-day moving average and my 300-day moving average. You can add your RSI in here as well. We might as well toss it in and just leave all the defaults here, and that'll add this bar here. All right, there's a lot going on here, so let's just quickly take a look at what we're looking at. Obviously, we have the Bollinger Bands here. SoFi has now blown past this Bollinger Band. When we have blown past the top of Bollinger Band, or we're playing around at the top Bollinger Band, this is the time to sell your covered calls. Why is it the time to sell your covered calls? For a few reasons, right? Let me just go over the past year. For the most part, SoFi and the Bollinger Bands hit the top of it and then retracts back down, right? So what does that mean when we look at this? Well, most likely than not, right? SoFi is going to run up, right? And then also come back down. So when we look at covered calls, we can be like, hey, you know what? Let's go look at the covered calls and what we can actually do with SoFi. So let's go to covered calls here. We'll go to our options. Or this is a little bit more obviously advanced video, guys, for you guys. We'll go out about 31 days, and then let's say we're willing to sell our SoFi shares if it hits, $16, right? So for if we do the $16 shares, we're collecting $47, right? Let's put that in our premium calculator. Our strike is 16. Let's say you purchase them around like 12, right? And then I do this, and I'm like, okay, here's kind of what the trade looks like on my covered call. Is this something I want to do? Okay. It's real quick, real easy, right? I literally just did that. And all these calculators are free in our Facebook group. If you don't know, join it. It's an awesome group of option sellers. Everything is free here on this channel unless you want to work one-on-one together. That's it. Everything else free. Go use this stuff. The links are in the Facebook group. So I got my premium here. I put my strike that I'm willing to sell for. I purchased them for around $12. I collect around a 4% premium return, which is the 47 premium divided by the 1,200, right? 12 times 100. And then our profit on the shares, if we sell them, is 400. Why does this work? Okay. Let's go back over to SoFi here. Again, Bollinger Bands, it's all a Fugazi. Nobody knows what a stock is going to do up or down. But when I look at it over the year, right, I can usually see that we bounce off the top Bollinger Band and retract back down. Now, that doesn't necessarily mean it's going to happen, but that tells me, okay, even if, right, we keep going up a little bit, it's going to retract back down. Now, it might not retract back down to these levels that we've seen just last week. I mean, who knows? This market's crazy. But it's most likely, right, going to hit a certain resistance level and retract. That resistance level for me, I like to look at around 16. Why? When I look at it, I'm like, okay, well, why do I like 16? Well, when I look at it over a year, I'm like, okay, when was the last time SoFi was at $16? All right, and like really held there. Well, it hit like 16 back in February 2025, and then before that, it only touched it and kind of came back down, right? And it has been really struggling since. And when I look at this, I'm like, man, there's really not many times where it really held steady at 16 for like a long period of time. All right, did I do 16? Because even if I sell it, I'm fine because I'm totally cool selling my shares. But most likely than not, when I just look at the chart, I'm seeing that we really never really held 16 for a long period of time, right? So that to me is like, okay, that's cool. Rule of thumb. Covered calls, best time to sell them is when stocks are blown up. Obviously, SoFi up 9% today. That's crazy, right? To me, that's crazy. I take that emotion out of it. See, like you really want to be good at understanding the fear and greed index. It looks simple here, but look, everybody's now extreme greed on SoFi. At the beginning of the month, everybody was at extreme fear. You have to learn emotional control in this game is the most important thing you can do. It's better than any technical, any Greek, any of that crap, right? If you can learn to be greedy when everybody's fearful and then fearful when everybody's greedy. Right now, with a setup like this, when a stock is blowing up, I am fearful. I am fearful. Okay? A lot of people, retail, are buying it now, right? So for me, I rather take a little bit of my chips off the table. Okay? So that's how I like to analyze the cover call side. You can go and also look at your Greeks and stuff. You can see this is about a 30% delta as well. So there's only about a 30% chance that I'm actually going to have to sell my shares. 70% chance this expires worthless and my shares get released to me and then I can run another call the following month. That's basic high level of how I would analyze a covered call position and enter it, right? But it all comes down to your strategy, folks, right? Like I do work with a good amount of private clients. And like for me, look, there is no one size fit all. There is in this game, there is no one size fits all. You might be, somebody that is all about more capital preservation. You're shooting for much smaller returns than somebody that is younger and willing to take a little bit crazier risks, right? So you have to fit it into your strategy. Maybe you're like, 16, I want it at 17. I really rather, I want to work those 0.10 deltas. I want to work those, right? Where I still really love SoFi, but it needs to be at that juicy spot for me to consider selling it. So then let's open up the 17s. All right, 0.20 delta here. You're collecting $17, right? Now let's take a look at that. So you're $17. I'm sorry, a cover call calculator. You're only collecting $17 here, but your strike of option is 17. You're collecting about a 1.42% return in a month on your shares, but your profit is increased a little bit by $100, right? So you just weigh these risks out for yourself and see what makes sense for you, okay? Usually a 0.20 to 0.30 delta, I have found, at least for myself, has worked pretty well for me. It gives a good balance of assignment and then also premium generation and risk management. Okay. So now let's talk about cash secured put side, right? So cash secured put side, we like to then do this on stocks that are kind of getting beat up. So Pepsi, one of my favorite stocks, obviously is getting hammered because a lot of their, they might have to change, or they are going to have to change a lot of their other ingredients and stuff like that, which is good, right? That's good for us, but it's not good for the stock right now, apparently. But for me, I believe this to be short term. I'm very bullish on Pepsi. I love Pepsi products personally, right? So for me, I don't see us not recovering in the future. I am very bullish long term, okay? So that's the first thing. When you're doing a cash secure put, you got to be bullish on your stock long term. I know that's probably contrary to what other people will say to you, because if you get assigned, you might be stuck holding it for a while and running your covered calls. You should be okay with that. Why am I okay with that, especially with a company like Pepsi? Because I get to now collect 4 sources of income. This is called the quad option strategy. I can do a cash secured put on Pepsi. If I get assigned, I could do cover calls. I collect a dividend from Pepsi, and eventually I will sell it. Eventually I'll sell it, and I collect my appreciation sale. Okay, that's called the quad option strategy. That's what this channel is all about. Okay, so you could see 200 and 300 day moving averages for Pepsi. 300, 163, 200, 159. We're trading at 133 right now. I love getting into these really, really good business companies when they're just getting hammered like this. 133 is wild. It's just wild to see Pepsi at 133 here. So we have our Bollinger Bands here. I'm just going to go on that 3-month chart so it cleans it up a little bit. And we could see we are actually below the Bollinger Band. And you could see we usually hit and then retract from the bottom, right? It usually happens. Sometimes we dip really below it like we did at the bottom, but then we retract, right? Now, again, we don't know if that's going to 100%. There's no guarantees in this world, and especially with technical analysis, right? But we build a thesis. We give reasons why we do something. The last thing you want to do is be a trader that just has no reason why you did something. Like, get some basic technical analysis. Where are the BBs at? What's the RSI at? Or like, what's your Greeks at, right? What is your actual goal, right? Like, what is your return goal? Are you taking unnecessary risk right now, right? Just to chase a premium, but it's gonna hurt the rest of your portfolio? Or are you like just being like, hey, I'm a 1.5%er and I'm happy? Stick to your plan. Can't stress it enough. So I'm looking at Pepsi right here. We are down at the Bollinger Band. Setup wise, from the technicals, fantastic setup, right? I love the company. Technicals look good, right? Then what I want to do is I'll usually look over a year, 5 year. Again, I'm bullish. I don't mind if I have to hold Pepsi for a long time. I look over the year. Pepsi hasn't been at 133 in the last year, right? I'll look at the 5 year. When is the last time this thing was at 133? Now, again, just because it happened in the past doesn't mean it's going to work out the same way, but it at least helps us out build a thesis. And this is my simple way of doing it. So the last time this thing was at 133, right, was around 2021. 2021. That's to me, I'm like, hell yeah. Okay. I think, again, I'm bullish. This isn't, financial advice. You go be bullish on whatever stocks you like. So I'm like, since 2021, it has not been at 133. Okay. So to me, I'm like, okay, this is nice. Let me go now that I've done some basics, right? Let me now go look at Pepsi from the chain, all right? We'll go look at trade, sell, put. We'll just do our standard 30 days out, 31 days out, trading at 133. Now I start looking at these numbers. Even though I think 133 is a fantastic price for a bet, I do believe Pepsi is a fantastic price at 133. I still want to get it a little bit lower if I can and collect a really good premium return, right? So I look at the 130, right? I'm just looking, right? I click into the 130. I see my delta's out of 32, a little bit aggressive, right? I might go down to the 125s, okay? 125 is a 0.17, a lot more conservative, right? 0.18, right? A little over 80% chance of nothing happening, right? So for this one, if I'm like, how bad do I want to get assigned? If I love it at 133, I'm obviously going to love it at 125. But what if I don't get assigned? What if Pepsi rebounds and I don't even get to buy a DCA into it? That's a decision you need to make, right? So look at, like, for example, like if I look at the 130s, I'm like, okay, I like 130s, a little bit more aggressive, but I don't mind, getting in at it at 130. I collect about 194 in premium. Let me go type this all in here, and let me just go start seeing. Like, let me start seeing my what everything looks like. So $130 a share. Okay, so that's 13,000. I'm getting about a 1.5% return in a month on that. Annualized, that's about 17.5%. Okay, I like that. That makes sense to me. But let's go take a look at the 125s, right? So 125s, I'm collecting 89, and I have less of a collateral. I have 12,500 now, right? Much less premium return here, right? And a much less chance of an assignment. So that's where you have to weigh those risks for yourself, okay? Now, even if you really want to get it at 133, like if there's and this happens on this, why everything is, I hate saying this, but everything is a case by case basis. There is no one size fits all to trading. Please God, don't let anybody tell you that, because they're just trying to pull one over on you. All right. They are. What you can do if you really want to be assigned, right, is obviously you can go buy the shares, right? But if you really want to be assigned and collect premium, you can go and do your weekly, right? So for example, let's say I genuinely want to buy Pepsi at 133. I could go out 3 days from now and I can sell this put for 133. Now that doesn't mean I'm 100% going to get assigned, but Pepsi could rebound today to like 134, 135, and I'm not buying it, right? I'm not getting it. But you're collecting $124 in 3 days. All right, let me show you what that looks like. So cash secured put, what we're collecting, $124. Our collateral is 133.00, 13,300. We get a 0.93% return in 3 days, though. Annualized, that's crazy. I mean, 113%, obviously annual is unrealistic, but you're not going to be trading like that every single day. But I always like to look at that for when I'm potentially closing out positions. But in 3 days, to almost get about 1% on your money, That's damn good. And getting a stock that you want, you're essentially getting one share for free because you're collecting premium of 121 and it's trading at 133. So you're essentially kind of getting like one free stock. Guys, don't forget, drop a comment for the Rolling Playbook. This is going to talk to you and teach you how to roll your positions. You guys asked me for that a lot as well. So you're going to get that Rolling Playbook. Just drop a comment. I'll personally respond to every single person. While you're down there, hit that like button, hit the subscribe button. And if you're somebody that wants a more hands-on approach with me, I have a 1-year-long incubator. I do believe it takes about a year to really master this stuff, where we work more in a more intimate setting, one-on-one, where I show you how you can set up an option selling portfolio for yourself. That link will be down below in the description of this video if you want to learn more about that. But remember, guys, sell options, collect premiums, repeat. I'll see y'all tomorrow.